The stock market has been pulling back the last few days, and the question is whether or not this is an opportunity to start stepping in and buying some really great names as the overall market is dipping, or if there is more room for this thing to retrace lower. We'll talk about the broader stock market as well as a list of stocks I've got on my watch list here today: Robinhood, Coinbase, Palantir, Rocketlab, Amazon, UnitedHealth, Walmart, Target, and TJX. Some retail stuff that looks really interesting we've got to talk about right now, as this is definitely a concern to the broader market. Let's jump in. First and foremost, taking a look at the overall S&P 500, you can see from those lows, we've had a huge bounce and now, in my view, look a little bit stretched to the upside. I've been saying this in my recent videos, and I actually bought a long call position on the VIX. You can see what I did here is essentially, I think the VIX has room to expand higher, but I gave myself some time to be right on this idea. Essentially going out to the 19th of November, I bought the $15 strike price calls and sold the $30 strike price calls to reduce the premium cost. So overall, I spent $4.39 times 500 shares, which comes out to a premium spent of $4.39 times 500. I have a max potential risk on this options long position of $2,200. What this also does, however, is if the market broadly sells off for a little bit, that VIX call position could help to hedge my bets a little bit. And on Friday, we hear from Jerome Powell in the Jackson Hole speech, which could cause some serious market volatility. Evercore warns of a 15% drop. Of course, I think a 15% drop is a little bit dramatic, but I do think that the markets are broadly a little bit expensive and have room to pull back even on a small potential hawkishness sounding speech from Powell. And some of the retail favorites like Robinhood markets have really pulled back here recently. We saw a sharp drop from the previous highs at one point of 16% in just a few days' time. But as so often we see, really hot retail stocks oftentimes get bought very aggressively in the dips that take place. As you can see yesterday, dip buyers stepped in and are pushing back the stock here today. We'll see if this can sustain itself and maybe make a push back towards those highs. But again, this is why trying to short stocks that are crowd favorites is a really tricky trade. Speaking of crowd favorites, take a look at Palantir. And from a trading perspective, I do wonder if there is some potential value here in trading this retracement that we did see to the 20-period moving average. Price collapsed by at one point 25% in just under a week, which is absolutely crazy and just goes to show when something is a high-flying name and a very popular name, it can get slammed hard. And I do want to warn that yes, you did get a really good reversal candle, which could signal some upside. I do think that if I was to be, a buyer here, if I was taking even just a short-term trade, I would definitely have to look for stops below this previous low, because at any point that this thing decides it truly wants to roll over and get revalued, this thing could collapse easily another 50%. But to be completely honest, the risk to reward on a trade here, if the market does continue to chug along higher, looks pretty interesting on Palantir. Again, definitely not an investing level for me personally, but from a trading perspective with a stop below, I don't hate that idea. In fact, if we map out the idea of this just going back to its previous high, that would be a 22% profit in related to a 11% drawdown or loss if the stock were to drop here further. Of course, the problem with this is with stocks, you have the potential for big gaps, which could gap much lower than your stop loss. So the way to potentially play this would be if you were really bullish about Palantir, you could essentially look for call options and maybe look for something like the 180 call or 190 call. Again, very risky as options are essentially leverage, but buying those calls if you do think the stock is set for a rally could be interesting. Personally, I will not be doing that. When it comes to stocks, I really don't love to chase retail names, but from a trader's perspective, that doesn't look too bad. Price is at a pretty highly decisive point, and again, from an investor's perspective, I really can't justify this stock. Taking a look at their earnings, Palantir has had really impressive earnings per share numbers relative to expectations, which is true. However, the market prices them so expensively relative to those earnings. Let me show you. When we take a look at the trailing 12-month PE ratio of Palantir, you're looking at a 520 PE, even with the market's pullback here recently, which just is such an astronomical number and so incredibly expensive that this stock better have perfect numbers for the next few years or the stock is going to collapse. And there are all sorts of different types of investors, but for me personally, investing in something with the hopes that it has a perfect track record is just not really where I like to invest. I like to buy stocks or trade stocks that have, some sort of a middle ground. They are expected to do well, but they're not expected to be perfect with no hiccups. A stock that often comes to mind and is the kind of perfect example of stocks that I like to buy right now are things like Google or Amazon. They have growth, they look good, the technicals look nice, and the fundamentals support, the earnings growth that are underlying the company. And when we take a look at Google's trailing 12-month PE, you can see it is now kind of in line with its 3-year average after the recent rally, but the stock for a little while was trading relatively cheap and was an opportunity to buy it. And that's in fact what I did on Google. I bought shares around $165 in the sell-off that we saw this year because I thought the valuation made a lot of sense and that the risk-reward profile in this stock looked attractive. Today's video is sponsored by Moomoo. And if you haven't heard of Moomoo before, they're a one-stop global trading platform with over 26 million users across the US, Australia, Singapore, Canada, Malaysia, and Japan. And Moomoo offers $0 commissions on stocks, ETFs, and options trades. They also offer free level 2 data and real-time options chain data, no extra charge. And the Moomoo platform is super advanced. They offer a really powerful options trading tool, and you can even track latest public figures holdings like Nancy Pelosi's directly within their portal. And if you want to learn something about a particular stock, just ask Moomoo's AI feature. With this tool, you can ask for trading insights on your favorite stocks. And if you want to tap into what institutions are buying and selling, check out their institutional tracker. This tool allows you to explore top institutional holdings. What sets Moomoo apart is their incredible platform for researching stocks, checking out all sorts of different analyst rating tools, and insider holdings and trades. And for a limited time, as shown on the dates on the screen right now, you can get up to $1,000 in Nvidia shares, plus 8.1% APY for US users. As you can see on the screen, please follow the criteria here and make sure to use the link in the description to get the full context behind this offer while it is available. It is available for only a limited time. And are you already trading with another brokerage, but all these tools sound pretty cool? Well, I think so too. And they're currently offering a really cool 3% match on the first $1 up to $20,000 transferred from another brokerage. So if you're looking to take your trading tools to the next level, check out Moomoo and take advantage of some of the offers available using the link and details in the description of this video down below. Now back to the video. And you can see since then the stock's up about 21% from where I bought it, and I've also been making some money selling calls against my shares. I also played an options trade around the earnings volatility. This actually expires tomorrow and will almost certainly expire worthless for a 100% of max profit gain of around $310. Another retail favorite here recently is Coinbase, which I think just lost its momentum and in my opinion may have some rocky roads ahead for a little bit. The stock is down at one point here recently around 34.5%. And if you're a big bull on crypto, then you could potentially trade this thing from the long side. Like if you believe in, Bitcoin making a bigger move higher. But for me personally, I do think that the Bitcoin world and the crypto world is a little bit red hot for my taste as well. Again, here's Ethereum, which has been explosive here recently. You have Bitcoin, which has also done really well and maybe due, in my opinion, just for some consolidation sideways. As in line with the stock market, I think risk assets may be due for a little bit of a pause or sideways trading action. Another retail favorite and possibly a trading setup here is ticker symbol RKLB. This is Rocketlab Corporation. I think of this as a competitor. Well, not just I think of, but it is a competitor to SpaceX. They're launching or looking to launch satellites into, kind of space to create all sorts of different internet opportunities and on a broader sense, all sorts of new age space industry stuff. Highly speculative, highly risky, but could have some potential big payouts in the future, just like the internet did back in the 1999 era. From a trading perspective, the stock has been a real favorite, and there is an argument to be made that you kind of have just this pullback consolidation zone after this big run up. This could be sort of a buy the dip opportunity if you were looking to trade it. Again, if I were to play this, what I'd be looking for would be to essentially look to buy calls if I were to trade it. Now, again, I don't usually take these types of trades, these momentum trades, unless I feel very strongly that the overall market will move higher. I am, as I've discussed in previous videos, more of a top-down investor. I look at the macro situation and kind of try and base my overall bias of markets and timing stocks based on the macro. And when we look at the Stockbox's macro screener, it just is not quite right for me at this time. Specifically, you can see the stock impact over here on the top right is pretty ugly. So why is the macro screener giving us this score? Well, let's break it down in a simple way. So if we take a look at some of our growth metrics like PMI statistics, they have been really soft here recently. Take a look at retail sales numbers. This also came in soft. And if we look at inflation, we're still stubborn on inflation as well. The producer price index number that came in recently was red hot compared to expectations. While the CPI print came in a little bit soft, which is good for stocks, the PCE counterbalances that and also shows a rise relative to forecasts. Wage growth has also been hot, which is sort of inflationary. And when we look at jobs data, we saw a really bad NFP report, a good ADP report, but JOLTS job openings, initial jobless claims, which just came out this morning, they look a little lackluster. So the overall story for stocks here, I'm definitely going to have to give a not great outlook. And this makes me really cautious, especially on high risk stocks like a Palantir or Rocketlab. I will not be taking those types of trades, especially given this circumstance. If we were seeing pullbacks in those names, but the macro looked okay, those actually might be trading opportunities for me where I could maybe buy some calls and trade that upside. A stock that does look potentially attractive to me that I've talked about in recent videos is Amazon. I already own 260 shares, but have an interest in building a bigger position, especially if the market starts to turn down and we get some better prices on Amazon. I love the idea of potentially picking it up in the 215s, somewhere in the 15 to 20 range. Actually looks quite attractive to me for a possible buy, as I do think Amazon has the potential to continue to make a push back towards those previous all-time highs. That gives us about a 10% upside from here. By the way, this macro screener and the financial tools that I'm looking at within the stock box are all available within this one tool. So if you want to try out the stock box, I'll leave a link in the description down below to where you can sign up for a 30-day trial of our software to explore the macro screener and all of the financial data that we have on individual stocks. And while we do have a lot of individual stocks that are kind of underperforming, we do have some stuff that looks pretty strong right now, like CBOE, which is the exchange that offers all sorts of option stuff. If we take a look at like, we have AT&T breaking out here, we have Medtronic, we have eBay. So there are names. TJX had a really good earnings report, which was on our watch list here today. So we can take a look at some of the winners here today and talk about some possible momentum trades that could be forming there. Here's TJX, which gapped up big time on its earnings report. And you can see they reported a earnings per share actual number of $1.1 per share compared to the estimate of $1.01. So they had a really strong earnings report and the stock popped. And you can see yesterday the stock jumped big time on this, but has partially filled that gap. The question is, will it continue to pull back? And if so, could there possibly be a kind of momentum trade on this move in TJX? Maybe a pullback into this 50% or 38.2% retracement zone. If you're looking for momentum stocks, TJX definitely seems to be that name right now. And yes, I'm talking about TJ Maxx, the boring kind of retail outlet. That stock is not so boring. It's done really well in recent years, as opposed to a loser of the day, which is Target. Target, the obviously the big retail chain, has been absolutely getting killed here recently, and they also put up some uncomfortable forward-looking guidance for their earnings per share in the future. So the stock market, yes, they put in some good numbers, but what you don't see here is that they guided for future numbers that are not going to look good. So the company themselves always puts out an idea of what their sales numbers, or most of the time puts out sales numbers and estimates for future quarters. And so we got some really lackluster forward-looking guidance, and the stock market did not like this for Target, selling the stock off big time here. Initially dropped around at 10%, bounced back a little bit, but still in the dumps here. And this has been a stock that has completely sat out the bull market rally that we've had in the last few years. Another stock that has joined in the bull market in the last few years, but is pulling back hard, is Walmart. And Walmart stock is falling big after their earnings were disappointing. Profit outlook misses forecast as US sales growth accelerates. And you can see here the stock reported a lackluster earnings number, while revenues were slightly higher than expected. The stock is down 5%, which is a pretty good haircut from its recent pullback. You can see this is about a 6.7% discount on the stock. But Walmart is a tricky one for me. It still has a very high valuation, even relative to its recent history. The stock has gone parabolic in recent months, or recent years, I should say, and is pulling back here a little bit, but still not attractive enough for me to potentially buy. Another interesting stock to watch here recently is UnitedHealth Group. The stock has been killed here recently. It's completely dropped off a cliff from those previous highs. We have seen at this point a worst case drawdown of around 62%. And then the bounce back here recently does look like it may be trying to turn around, but I've mentioned this from a technical perspective. I want to see how this gap area, either it holds this area here of support and we continue to rally, which could put in a more decisive low for this stock, or if we come down and test this area. The other key support area would be this 270 area where we gapped open from. So we'll see what happens with UnitedHealth. I do think there is some upside for this company, as I do think it is oversold, and the financials still look really strong. Pulling up UNH on the stock analyzer tool, we have a 13 PE ratio compared to the 22.4 average, and a forward PE that also looks really attractive. And although there are some really valid criticisms and concerns around this company, what I still like seeing is that revenues continue to grind higher, and while net income has suffered a little bit here, I do think that there is a potential for this company to get some of the lawsuits and stuff that are behind it, the investigations, all that sort of stuff behind them, and at some point return to some semblance of its former glory. It's a super profitable company, and there's a lot of negative media around this company at this time, which to me actually produces a potential buying opportunity that looks like it has a decent risk to reward. This stock is still, however, like most stocks, very risky and could continue to push lower, but to me, I think the upside potential, the risk to reward on this stock looks really attractive. I'll be continuing to post more of the stocks that I'm watching on this channel, but if you'd also like to join us in our Discord or Telegram channel, I'll leave the links in the description down below to explore it. And remember, if you want to try out the tools that I use to scan markets, specifically stocks that I like on a financial basis, check out the stock box linked down below in the description, and thank you for watching.